We work hard as physicians to take care of the health and well-being of our patients. But when it comes to our money, do we have the same condition of care? Probably not. Let's change that together. Welcome to the Financial Freedom for Physicians podcast, where we'll fight and advocate for your financial literacy. As always, I'm your host, Dr. Christopher Liu. Thanks for being here. Let's jump into the show. Hey guys, I want to welcome you guys to the Financial Freedom for Physicians podcast. We've got a great episode this week. Before we begin, please hit the subscribe button as well as the notifications bell, and be sure to like, comment, and share if you like this episode, and we'll get into this week's sponsor and show. This week's episode is sponsored by CityVest. CityVest has quickly become the most popular and best way for doctors to invest in top-performing real estate private equity funds that are usually reserved for institutional investors. This unique access to investing in these institutional funds is available for the first time ever through CityVest's easy and secure online investment platform. CityVest does the hard work of conducting due diligence and vetting the investments. They even get a third-party due diligence report that is posted on their website. As a result of aggregating a several million-dollar investment amount into their access funds, CityVest gains access to investing in the institutional investment and is able to negotiate better investment terms such as a 12% preferred return. You can check them out at cityvest.com or go to the link in the show notes below. Now on to the show. Before we begin today's content, here is a quick disclaimer. The information and material presented here is for informational purposes only and should not be construed as investment advice. The content is not a recommendation to buy or to sell. Some of the content may be for accredited investors only or may be sponsored posts. Every investment carries risks. Results have not been verified, so carefully weigh those risks against your investment goals and objectives and see if acting on the information matches with your investment thesis. Do your due diligence prior to investing, and as always, do not invest more than you can afford to lose. Welcome, everybody, to this week's podcast episode for the Financial Freedom for Physicians podcast. I'm your host, Dr. Christopher Liu. And as you know, we talk about 4 different types of freedom: time, location, emotional, and financial freedom. And we started out with a group of physicians, and now I'm opening it up to the masses and offering individuals that are doing things on the cutting edge, outside of the box thinking, so that to bring you information and education to empower you and inspire you on your freedom journey. So today we have Lance Belline, and he is a CFP financial advisor, and he's going to talk all about financial freedom, taxes, wealth management, and I'll let him share more of his story with you guys. So Lance, welcome.
Thank you for having me, Dr. Liu. Pleasure to be on your show.
Yeah. No, we were talking backstage. You have a very interesting background. A lot of physicians are interested in finances. Tell us how you got your start in the financial services industry.
Yeah, I got started actually right out of college. So not that I had a vision or a crystal ball of what I wanted to do in my life from college. I had a finance degree, but that it's not like I knew exactly that I wanted to be a financial advisor. And what I found is as a hard worker, worked through school, but I didn't have great grades, and I didn't intern at the best companies. And so I was kind of found out that, when you don't have those two combinations, the companies in my area, which is in Northwest Arkansas, like Walmart, JB Hunt, or Tyson, weren't overly impressed, right? I wasn't wowing them. And so you found out you go into and more on the sales side, where I was able to get interviews. And that's when I got introduced by a firm that said, hey, why don't you consider being a financial advisor? And tell you the truth, I'm not be transparent. It's not like I knew exactly what that was, but it was a job at the beginning. But through, I'd say, divine intervention led me there. And I then became a student of financial planning and just really dove headfirst in it, worked very hard, those first 5 to 10 years. Became a certified financial planner after about 4 or 5 years in the industry. And then it's just evolved. Started my company in 2009 with one person. Now that's evolved to 9 advisors. And I think 8 full-time staff. So it's a smaller boutique firm that I currently have.
Yeah, that's a very fascinating story. And, finances are so important in today's economy. Tell us, what type of clients do you work with?
Yes, Dr. Lou, generally speaking, we're working with individuals that have a little higher income, higher net worth, that are, planning focused, that are, wanting to get guidance and counsel that would help them, combine tax strategies with investment strategies that's going to allow them to, of course, achieve their financial goals, but hopefully pay less taxes over their lifetime. And at age 37, I formed I would say a mastermind group, a study group of other advisors in the industry. And what I wanted to do then is share best practices, ideas, concepts. And I, in essence, picked up the phone and called other certified financial planners, shared them my vision. And we've been, and that's really kind of as a turning point in my career as far as changing, having an aha experience. I don't know if you've ever in your profession, had an aha experience. You're like, why didn't I think of that? Or that was amazing. And that's what happened from when our first meeting, when a person from Seattle, Rich Stewart, kind of threw out a comment to me or to the group, because I'm going to show you guys how to take money out of an IRA and not pay taxes. And I was like, I just don't think that can be done. But long story short, it can be. And I have a partnership with a CPA for over 20 years. So I came back from that meeting and said, we got to clear the calendar, get into your tax software. We're going to get our arms around this. And from that point forward, the bucket strategy of wealth accumulation is what has transpired from that. And so it changed the way I accumulate wealth myself. So, of course, I'm going to make sure that's passed on to clients of our firm.
Yeah. Yes. So with the high net worth individuals or high income earners, do you find that which is more on their minds, taxes, financial freedom, or wealth management?
I would say taxes are generally the highest topic, right? And it should be, because in my opinion, that's the influences has the biggest influence as far as our impact on the wealth we do accumulate and the wealth that we do transfer maybe to our next generation. And so and then second, I would say having a financial plan in place, right? Because generally they're going to be, either an entrepreneur or successful in their career, and they need to know that work and it is not all for naught, and that they're making sure they're setting aside the resources to meet their financial goals, and need to partner with a firm or advisor that they can trust and get wise counsel to.
Mm-hmm. Yeah. I was reading I think it was Rich Dad or Robert Kiyosaki is saying that taxes are your biggest expense in your entire life. So, what are some of the ways to reduce or eliminate the amount of taxes high income individual to pay the IRS?
Yeah. I would say I'm gonna throw you a little curveball to say I think people put too much emphasis on paying less taxes in their current year, right? So 2022, for example, and not enough time accumulating their wealth strategically so that they can lower the amount of taxes they pay and have it in the future. And let me kind of explain that. So if you just, all your listeners could Google this, federal historical tax rates. And if you do that, you're going to find that in our U.S. history, we've had federal tax rates as high as 90%, as high as 70%, 50%, even just to the 80s. Over the last 20 years, we actually are in a historically low tax rate environment. I mean, the highest federal marginal tax rate is 37%, right? And that's if your income is over $650,000. So I know that you and your listeners might feel that they pay a lot of taxes, but I am actually going to argue that we're actually in a lower tax rate environment right now. And I'm not an economist, and I'm not going to make any guarantees as far as what the future tax rates are going to be. But I do know our federal government has a very high deficit. I do know that some federal programs like Social Security, Medicare, Medicaid, right, are financially bankrupt. Mm-hmm. And the government's going to need to raise money, or they're going to decrease expenses. So the way they're going to increase revenue is through what? They're going to raise tax rates. Mm-hmm. So I think we need to have a mentality as, all right, how do I grow my wealth so that I can pay less taxes over my lifetime, but not necessarily right now. Now, if you're a small business owner, there's definitely a strategy that you have. I have it in my book. But if you're a W-2 employee, like some of your physicians that are working, if they're W-2 employees, there's very little that you can do in order to lower the amount of taxes you pay. If you're self-employed, you can implement some strategies to lower your taxes, but not if you're a W-2 employee. The way to think about your wealth accumulation strategy is, let's say I throw out a comment. What if I could show you how to have $120,000 of income in retirement, and you only pay $1,410 of taxes, less than a 1.5% rate?
We hope you don't mind this brief interruption from one of our affiliates.
Doc to Doc is a personal lending solution designed by doctors for doctors. We understand that doctors' financial situations change faster than an insulin drip in ketoacidosis. And we also understand that doctors are the most reliable borrowers in the world. Through our proprietary algorithm, we're able to provide personal loans at great rates with amazing flexibility, because we take into account your schooling, your specialty, and where you are in the medical journey. Doctors come to us after they've matched into residency, and we loan for all sorts of personal reasons, from credit card debt consolidation to family expenses and medical bills. We speak with everyone who applies for a loan and offer fixed interest rates and flexible term options without prepayment penalties. If you're a physician looking for a personal loan, fill out our application form now. It only takes 3 minutes, and we'll get back to you with a decision within 24 hours.
So how do we do that? So you have to think about wealth accumulation. So if you can pay a 1.5% tax rate, let's say for 20 years of your life, that is significantly decreasing the amount of money that goes to the government. And that would either then allow more money to go to your friends and family or charities. And so in order to do that, you have to position your wealth and plan with a distribution strategy in mind. And this was the aha experience I had, again, when I was 37. And I was just saving money and advising clients to save money and accumulate, but I wasn't thinking about the distribution strategy. And so when I mean that, there's 3 types of investments or categories that you can accumulate wealth in. I call them buckets. So bucket 1, I call it your pre-tax bucket. And I'm probably most aware of this one. Have you ever heard of a 401k or an IRA?
Mm-hmm. Yes.
Okay. And when you put money in those, right, it lowers the amount of taxes you pay based on your contribution. So if you put in $10,000 and you're in a 30% tax rate, you avoided paying $3,000 in taxes. That's a good thing, right? But that money then grows tax deferred, never is taxed until you make a withdrawal in retirement. And then it becomes actually your new W-2. And that's what a lot of individuals, are not aware of. Your bucket 2 investments, I would call your after-tax investments. It's where you take some money, you had some excess money, and then you decide to buy a stock, a bond, a mutual fund. You invest in real estate. You grow that wealth, and then that money does not have an income tax rate. It has a capital gains tax rate. And there's three tax rates that exist for income, for your capital gains: 0%, 15%, and 20%. And this is where many individuals don't understand how the tax system works. So you have income tax rates on one side, and you have capital gains and dividend tax rates on another side. So I'm going to share with your listeners how we can qualify for that 0% tax rate in just a little bit. First, let me cover bucket three. Bucket three is what I call your tax-free investments. Have you ever heard of a Roth IRA or a Roth 401k?
Yes.
Came in existence in 1996 and later in 2000. Retirement plans, when you work for a company or hospital, they've, a lot of now have amended their plans to allow contributions to be into Roth. You also have health savings accounts. You have cash value life insurance would be in there. You have the backdoor strategies, backdoor Roth IRAs, the mega backdoor Roth IRA strategy. So those are your three categories: pre-tax, after tax, and tax-free. The three buckets: bucket one, bucket two, bucket three. So what we want to do is grow your wealth strategically in each of those buckets, and then I can influence or camouflage the amount of income that Uncle Sam taxes when you decide to retire. So picture this. Let's say that you have $1 million in each of those buckets: pre-tax, after tax, tax-free. We would draw $40,000 from each of the buckets. That is $120,000 in total. Uncle Sam considers your withdrawal out of bucket one, the pre-tax bucket, as your W-2. Now, remember, you're no longer working, right? So you've retired. So $40,000 is your gross income. They then allow you as a taxpayer to get a standard deduction. That is $25,900. And so when you take $40,000 minus $25,900, that equals $14,100. That is your taxable income. You now, because your taxable income is less than the 12% income bracket, which is $83,550, you qualify for a 0% tax rate on your after-tax investments, or bucket two. And that's the magic, is qualifying for the 0% tax rate. But in order to do that, your taxable income has to be less than $83,550.
Interesting.
While you're working and you're growing wealth, you don't want to make less than that, right? If you did, you could probably raise a family, right, and pay for the bills. But in your distribution years, then you definitely probably could live on $120,000, but you're only paying income taxes on the $14,100. You qualify for the 0% tax rate for your capital gains. So that $40,000 that was normally getting taxed at 15 to 20% now gets taxed at 0%. And then you have your other $40,000 from your tax-free, which is tax-free. And so you're paying 10% on $14,100. And that's how I got to that $1,410, federal tax.
Mm-hmm. Yeah, that's interesting.
And so that's the concept. If you can do that and lower your amount of taxes that you would pay by 10, 15% a year, let's say for 15 or 20 years, that's a significant impact as far as the amount of wealth that you're going to keep, in your family versus giving to Uncle Sam. So that's the error that I find many individuals are making. Is there? And again, I was doing it myself, and I was in the industry, right? As a certified financial planner, but I wasn't thinking outside the box until Rich Stewart opened my eyes a little bit as far as thinking differently. It's like, how are you going to get your income in the future and then grow your wealth strategically so that you can substantially decrease the amount of taxes that you pay? Or the individuals listening maybe say, well, how much do I currently have in pre-tax? How much do I currently have in after tax in bucket two? How much do I currently have in bucket three? And then where am I saving money right now? And then, part of this resource will be on my website that they can download an Excel spreadsheet that will help them with this. But then forecast based on how much I'm saving in each bucket each year, what's going to be my future net worth in each bucket. And then from that, we can determine approximately what your taxes are going to be based on what you want to live on, right? Because not everybody wants to live on $120,000. Some people can live on less. Some people, right, need more. But if you do that, then you're going to be in a position to influence how much tax you pay. Versus if you, Dr. Lewis, let's say you have 100% of your savings for retirement in bucket one, and you wanted to live on $120,000. When you make withdrawals from that, it's taxable as income, right? So you would have to withdraw $150,000 or $160,000 to net $120,000. And then you're always going to gripe about taxes because because your income is $150,000 or $160,000, that's greater than the 12% bracket limit of $83,550. So then you're going to always continue to still pay 15 or 20% a dividend tax rate or capital gains tax rate on your bucket two assets. And so you're always going to kind of be frustrated, I would say, and feel like you're paying too much taxes.
Mm-hmm.
Not be as focused on paying less taxes today, because one, we're in a low tax rate environment. And two, you can't really influence that much. Meaning if you're a listener's income, let's say is $500,000, there's not a lot that you can do except donate money to charity to lower the amount of taxes you pay. This federal tax code is not set up to benefit that person. The federal tax code is set up to benefit individuals that are in what I would call mid-America, right? Which is usually families making less than $100,000 a year. And so you have to grow your wealth strategically so that you can become one of those in the future when you retire.
Yeah, it's interesting once you know the tax laws and the tax codes and which buckets to allocate, how much savings and how much more financially free you can become. So yeah, I think you've given a lot of value. It's been a very interesting discussion. Taxes and wealth management are huge topics, especially for high income earners and high net worth individuals. So how can people get a hold of you, contact you, and possibly work with you?
Yeah, my company's name is Lighthouse Financial. That website is www.lhfinancial.net. My personal website for my book that's coming out in the fall is just my name, Lance Belline, Belline, .net. And I'm going to have resources, a lot of the inserts from the book available on my personal website. And then the book, which is called More Wealth, Less Taxes, is hitting the market on November 15th. But pre-order sales will be available after by going onto my personal website.
Excellent. And for all the listeners out there, Lance's information, links, and resources will be in the show notes. So Lance, it was a fantastic discussion. Thanks for coming on. And I'm sure all the listeners got so much value from your information.
Thank you for having me.
What a fantastic show. I hope you enjoyed our very special guest. Just remember, as a shout out to our this week's sponsor, cityvest.com. Cityvest gives you access to the best real estate private equity funds with enhanced investment terms, verified due diligence, and lower risk. You can check them out at cityvest.com or click on the link in the show notes below to hear about their upcoming investment offerings. If you enjoyed that episode, don't forget, that's just the free content. We also have paid premium content subscription with better guests, information, updates, and discussions that can't be accessed anywhere else. You can subscribe to our premium content by clicking on the link in the show notes below to subscribe. Just a quick note, members who sign up for the bottom floor price introductory the first year will be grandfathered into that price for life. I expect the monthly subscription amount to increase quickly next year and the year after, so don't delay. I'm excited that you made it for another episode. You are truly the best. If you've been following the show for a while, you know that my passion is to bring you the education you need to find your path to financial freedom. Please come back week after week for new content, new resources, and great guests. Until then, if you haven't already, please be sure to check out the website, www.drchrislewmdphd.com for more support. I'll see you next week.